Super investors have been buying up shares of Microsoft en masse, and in fact, it was the second most purchased security in Q1 of 2022. And the question is, why exactly are they diving into this name now? That's what we're going to cover in this video. So guys, smash that like button and subscribe if you're new. You're watching More Money. Let's get it. What's up guys, and welcome back to the channel where the goal here is to help at least 1,000 people achieve financial independence much sooner. And let's dive right into this one. So you can see here that in Q1 of 2022, Microsoft was the second most purchased security by super investors. And that's pretty interesting because when I started my career of investing, Microsoft was a very important name in the late 90s, early 2000s. And then largely it just kind of fell by the wayside, but they've kind of like really made this re-emergence recently, or at least in like the last 10 years or so. And I'll just show you that visually. So you can see here, Microsoft has reinvented itself and is a future-focused enterprise. The legacy operating system business is becoming less important, and cloud computing is expected to be greater than 50% of the overall enterprise in the next decade. And you can see that here with cloud being approximately 25% of the business, or the smallest segment in 2014, and now it's the largest segment in 2021. So it's made this huge surge, and you can see the reason for that is, look at the growth rates. It went from a 9.1% growth rate in 2015 to a 24.2% growth rate in 2021. And the other thing that I did want to point out here is look at the profitability. So you can see the operating income. I've put the profitability for each of the segments there. When it was started out, the profitability was in the 30s, but in 2021, notice how their profitability is 43.5%. And I believe as time goes on, that profitability is going to increase, not decrease. And so there is visibility to 50% operating margins in this business. I don't forecast that out, but I definitely see it happening. Now, what exactly is their strategy when it comes to their cloud computing business? Because there's multiple companies that offer cloud computing solutions. So why is it that Microsoft has been succeeding at a very profitable level? And so you can see here, they sort of talk about this strategy in their annual report. And so they say that in the new remote world, companies have accelerated their digital transformation. And so what Microsoft is really doing is they're partnering with organizations on their digital transformation in this period, and they see it as one of their largest opportunities. This is not the first time that we saw a company talk about cloud computing being one of their largest opportunities. We already know that Amazon, they generate more than 100% of their operating income from the cloud business. And Alibaba has come out and said that they expect that cloud computing is going to be one of their largest business, or the largest business for the company in the long term. However, coming back to this, they do say that Azure, which is their cloud computing brand, is a trusted cloud with a comprehensive coverage and AI-based security built in. So what exactly do they mean by that? And really what I'm looking at is, where's the moat with their cloud offering? And so they're describing it by saying that their cloud business benefits from 3 economies of scale. The first one is lower cost per unit, and that's really good, and it makes sense because they have so much operating scale, which is something that you can do with a lot of capital, as you'll see that Microsoft has. The second thing is they have a diverse customer, geographic, and applications. And so the reason why that's important is, if I operate a specific type of company in a specific remote type region of the world, I do want my business that's run on the cloud to be operating fast. And so I need a cloud data center that's located near me. And so the fact that Microsoft's system is available globally, that's a really good thing. And finally, they're saying that they have multi-tenancy locations that lower application labor costs. And so effectively what they're saying is they have scale here. So of their locations, there's so many tenants who are subscribing to that particular data center that the overall maintenance cost to any particular person is a lot lower. And that makes a lot of sense. And so I highlighted exactly what their strategy is. They are a global scale cloud provider. Now, here's the other interesting thing. And this is one thing that a lot of people are missing, is they are investing in the metaverse. Now, I always say the metaverse isn't one thing. It's not owned by one person. It's just the newest development of the new internet age. I almost call it like Web 3.0. And so they said, we are accelerating our development of mixed reality solutions with new Azure services and devices. Microsoft Mesh enables presence and shared experiences from anywhere through mixed reality applications. And so they see this opportunity to merge the physical and the digital worlds. And like I've always said, this is the direction that the internet is going. One of the key areas where I saw sort of the beginnings of the metaverse is when you go onto Zillow's website, there are some homes where you can actually walk through the home, and they're right now doing it through 360-degree pictures, so you can sort of like look around that way. But in the newest metaverse offerings, I would expect that I could actually walk through the home using sort of like a metaverse type device, like an Oculus Rift or something. And so that's just the direction that the internet's going. The other area where I see a huge benefit is like for classrooms. Like, for example, we have a monthly meeting with the Patreons. How great would it be that we could all gather in a room together, and I can just sort of broadcast something and we're just all together. And I see that being sort of like the next step for meetings. So for Microsoft, because they have such a large enterprise presence, it makes a lot of sense for them to drive the change in this business. So moving on, you can see that they are really winning in the cloud business, both on the top line growth and on margin improvement. So you can see that cloud is growing at approximately 24%. You can see that in 2020 and 2021. And I'm forecasting cloud to grow at approximately 25% going forward, but you can very easily see cloud growing at a rate much faster than that. I think year to date, they're ticking at approximately 50% right now. So we'll see how that plays out, but I like to keep my growth rates subdued somewhat, so just take that into context. And then obviously the operating profit margins are huge for Microsoft right now, where they're increasing. So in 2020, they were 37.9%. In 2021, it was 43.5%. In 2022, it's increasing to 44%. And then thereafter, I forecasted at 45%, but like I said earlier in this video, it's very easy for Microsoft to increase those profit margins in the cloud business to over 50%, especially as they build out scale. So there's two upsides to my valuation that I'm not forecasting out. One is the growth of their cloud, the annualized growth. It could be much higher than 25%. And two, it's the operating profit margins for this business. They could be much higher than 45%. So you can see that there's quite a bit of pessimism being built in, but I'm just trying to be more subdued until I learn more and more about this segment that Microsoft has. And moving on, you can see that in 2026, I'm forecasting that cloud becomes 50% of the overall business. And I was just talking about the margins. You can see that cloud also, when you stack up the margins of their other businesses, so their productivity and their personal computing businesses, cloud has the highest margins. And like I said before, those margins can go much higher. But overall, you can see that the company has very healthy margins in that low 40% range. And once again, if cloud's margins tick upwards, their very healthy margins could turn very much into that 45% area. So we'll see how that plays out. But also just note that just the mix of the business shifting more towards the higher margin business, which is also the highest growth business, which is the cloud business, will effectively increase the overall gross profit margins for Microsoft as a whole. So it's very important to forecast out Microsoft at the segment level to be able to capture that appropriately, which is what I'm doing in the model that the Patreons get access to. And then moving into the balance sheet, you can see that they have a very clean balance sheet with approximately $55 billion of excess cash. And so what are they using that excess cash for? Well, they recently just announced an acquisition. They're going to continue to buy companies, but moving on to their cash flow, you can see that they're a cash generating machine. They're generating approximately $60 billion per year going forward, which they're largely using to buy back shares, pay dividends, and of course, like I previously said, buy companies like Activision. Activision is an arbitrage type opportunity that I do have a position in. And you can see that they bought back $26 billion worth of shares in 2021, and they paid out $16.5 billion in dividends in 2021. And you can see that the free cash flow has been ticking upwards. But the most important thing, and the thing that I really want to talk about here, is look at how low stock-based compensation is as a percentage of free cash flow. It's nearing that 10% range, and it really hasn't ticked significantly upwards from that range. So what that tells you is that as an organization, Microsoft is very shareholder focused. They're very shareholder friendly. They are returning capital to owners. I will be very surprised if Microsoft isn't a company that Berkshire acquires shares in the very near future, if they already haven't done so already. This is a great company future focused, and ownership friendly. You can see how Microsoft very much aligns with the Berkshire methodology, and obviously it makes sense that they do because Bill Gates, who obviously doesn't run the company's day-to-day anymore, is good friends with Warren Buffett. So through that friendship, you can see why Microsoft is very shareholder friendly, but it's just surprising to me that Microsoft isn't one of Berkshire's largest stock positions, but that might change in the coming time. I think Berkshire has a lot of excess capital, and as I will show you the valuation, it's not a bad time to be purchasing Microsoft securities. Now, this is not financial advice, it never is, but it's just my personal perspective. So moving into the EPS valuation, you can see that at a terminal multiple of 22.5 times earnings, which is a very low multiple for a company growing at the rate that it is growing, I'm valuing the company at approximately $290 per share. And then once you add in that excess cash, you can see that I'm valuing the company at approximately $300 per share. And so at its current share price of $270 per share, I think Microsoft is trading at approximately 90% of their valuation. So it's a very fair price, if not a little bit of a discount to their intrinsic value. And like I say, in some cases, paying a fair price for an exceptional business like Microsoft makes a lot of sense. Microsoft is a future-focused business that also is extremely shareholder-friendly. And so Microsoft may be one of those cases where I'd be looking to snap it up for approximately 75% of its intrinsic value, and it's something that I would hold forever. So like I'm saying, I can't say enough good things about Microsoft. The only reason why I haven't added it to my portfolio as of yet is because I'm very greedy in this environment, and I'm really looking to buy this at less than 75% of their intrinsic value, and I don't think I'm going to budge on that, which might mean that I might be making a mistake of omission in this environment where I know Microsoft, I understand the business, I understand the opportunity, but I still haven't purchased it. So let me know in the comments what you guys think. Am I making a mistake by holding out, or is this the right way to focus on this in this environment where stocks could go lower? Now, if you want access to that Microsoft model and the tracker that tracks all the companies and has the accompanying models, you can get that at the lower tier of the Patreon. And like I always say, there's zero risk to you, because if you decide to try it out and you decide that it's not for you, no problem. Message me in Patreon before you cancel and let me know that you tried it and it wasn't for you, and I'll completely refund your first month subscription, because that's how much I believe in the work and effort that's gone into these models. And Microsoft is not the only company that super investors are making big bets on. I actually recently talked about super investors making a big bet on Meta or Facebook, and you can get to that video right here.